Very rarely do publicly traded companies have rabid fan bases. For the most part, investors care about one thing: making a profit. Now sure, a company's mission statement or meaningful contributions towards society could be a reason for an investor to go in, but for the most part, it's very rare that a group has an emotional attachment to a stock like a young kid in the Bronx that watches the Yankees every night. But there are a few, and one of them, for reasons unbeknownst to many, is AMC Entertainment. AMC is known as a meme stock, and it blew up during the pandemic thanks to a Reddit message board. In June 2020, AMC had about 104 million shares of stock outstanding. Now it has about 516 million. Roughly 80% of all AMC shares were issued in the last 2 years. Now on the surface, this doesn't make any sense. The movie theater industry has struggled to recover from the pandemic, and streaming has really cut into their profits. Right now, AMC is about $5.4 billion in debt, and it doesn't help that one of their biggest competitors, Cineworld, is reportedly close to filing for bankruptcy. So AMC knew they had to do something to help their struggling balance sheet and keep their supporters interested. And that's why management late last week just issued a new dividend in the form of preferred stock, meaning that instead of a dividend paid in cash, investors got a dividend paid in stock. In this case, this stock was called AMC Preferred Equity, or APE, a fantastic name to keep retail traders pleased. Now, before we get to that, we need to be aware that AMC has essentially ran out of common stock to issue. That's because when a company issues stock through its certificate of incorporation, they have a clear idea of how much they can actually issue to potential shareholders. That number can't be changed without a majority vote from outstanding shareholders. Now, AMC has tried in the past to get current shareholders to authorize more common stock to issue, but it didn't pass. At this current point, AMC is allowed to issue just over 524 million shares of common stock. And right now, they've issued slightly under 516.8 million shares, leaving about 7 million left to issue. Now, that may sound like a lot, but really in the grand scheme of things, it isn't. And that's where APE comes in. This is why they had to get creative. And again, think of it like a 2-for-1 stock split for shareholders. For every common share of AMC you held, you got an equivalent amount of APE. So AMC authorized 1 billion new APE units. 516.8 million of those are stock dividends, leaving management with 483.2 million preferred shares left to issue. APE shareholders have the same voting rights as AMC holders. They are entitled to any dividend the common gets. They would get paid the same in the case of the merger. There's a lot to list here, and we won't go over all of it with you, but they do have the same voting rights as AMC holders, and that's an important thing to remember. Now, it remains to be seen how many units of these the company can actually sell over time. But according to AMC CEO Adam Aron, on the second day on the New York Stock Exchange, 103.5 million new APE units and 77.5 million AMC shares traded. Now, AMC still has more value than APE right now on the exchange, but the reason that AMC did this in the first place was because it was an option to raise cash that AMC desperately needed. Plus, preferred stock contains stipulations that give the board of directors more power to make decisions without shareholder approval. Will this help them alleviate some of their debt? One would think so. Will this almost certainly dilute AMC stock? Yes. But the real question here is, will meme stock investors care? Furthermore, how many companies out there in similar financial standing have issued as much stock as AMC has in the last 2 years? The company's following, in some ways, is unprecedented, and it allows them to take risks like this to keep their brand alive. It's still too early to see how this is going to shake out, but to me, the story here again is the power we're seeing from a Reddit message board. Yes, there's a lot of other things right now that move markets faster and more strongly than Reddit boards do. But for all intents and purposes, AMC could be exactly like Cineworld right now and be close to filing for bankruptcy. But they've been kept alive by this strong, massive following that they have online. That is unbelievable to me. The movie theater industry is not in a good place. Right now, there are still people that are not comfortable going back to the theater, or they just want the convenience of being able to watch something from their couch. So the movie theater industry is slowly dying, yet AMC stays alive, at least for now. My name's Frank Fowler. We're going to have a lot more videos like this coming to you very soon right here at Real Vision.